Good afternoon. This is Rich Nelson with Allendale covering the wrap-up commodity comments. Today is Thursday, July 7th of 2011 here. Obviously, higher grain markets across the board here today. Corn up over 7 cents here. Soybeans up over 19 cents, and looks like the Chicago wheat up 6 3/4 here. As far as big news for today, of course, a few things lined up. Number one, export sales this morning were good. We actually finally got some confirmation that China did pick up a little more corn. 540,000 tons of corn was picked up. This is new crop, of course. In addition, an unknown buyer picked up an extra 300,000 tons. So it certainly was good to see that that low prices are quote-unquote getting some demand here. Also supportive, and this maybe a little more so than the China purchases, was the fact that the weather forecast, the extended weather forecast, has changed. Where yesterday it was calling for maybe normal for most areas, maybe a couple pockets of above normal temps. Today's forecast shows the 6 to 10 day as well as the 8 to 14 day, both above normal temps again for the entire Midwest. And keep in mind, as we get creeping closer towards that mid-July time frame, that's when, of course, when pollination is going to be hitting. And pollination this year is going to be widespread, anywhere from mid-July through the first week, maybe even 2 weeks of August, depending on what state you're in here. So obviously, high temperatures during pollination are a concern. Temperatures in the next week or so are going to be average to just a little over average. That's just fine for right now because we still need to get some heat in this crop. However, from mid-July on, that's the period where we do have some concern if high temperatures are hitting. Now, while that's all good news, we can note that there are some disappointing things to talk about today as well, which did help kind of rein in corn. As far as disappointing things, the China sales were expected. In fact, the trade was hoping for sales as much as 1 million tons more than was reported here today. So the trade is talking of numbers of China has maybe purchased up to 3 million tons total of new crop, or even higher than that. And as of right now, you can certainly argue that might be a little disappointing compared to the actual numbers which have been reported. Second thing to speak of here, China has actually approved Argentina now for corn imports. So bottom line is, you might have some people say, well, China might actually still be buying corn or might need to import large amounts of corn, but they may not even buy it from the U.S. That's a big concern here now that Argentina is in the game for corn exports. Third thing to speak of, this morning, just before the grain market opened, around 9:20 or so, it was announced that 3 key senators have actually come across or have colluded on a deal to actually drop ethanol subsidies at the end of this month. We, of course, know Senator Feinstein out of California certainly wants to drop these subsidies for ethanol. What was very interesting was the fact that one South Dakota senator as well as a Minnesota senator joined Feinstein on this deal. And of course, they might be arguing for, or they might have included some small revisions for maybe some ethanol blending pumps or something like that here. But bottom line, this is the first key piece of legislation to drop ethanol subsidies directly, which includes Corn Belt senators. This actually might have a chance of getting passed in the Senate, House, and maybe even Obama's signature here. So this actually is certainly something we're very concerned about here, and we will watch this story very closely here. As far as the next week's report, we do have next Tuesday, the monthly supply demand report. This is the one where USDA will be using those numbers from last week. So the large acre increase and also the numbers which implied poor usage in the previous quarter. And of course, poor usage was lined up for corn, soybeans, and wheat. So expect to see old crop numbers increased as far as ending stocks for corn, soybeans, and wheat, mainly for corn. New crop, expect to see corn new crop increase as well, higher acres there. In fact, numbers for next week, you might have some people saying that new crop ending stocks could jump up to 1.1 to 1.3 billion bushels. That's from USDA's last month of 695 million. Allendale are going to be a little more conservative. We're looking for 1.0 billion bushels ending stocks. Keep in mind, these numbers will be revised lower in the coming months, in August and again in September here. For soybeans, the numbers for new crop weight aren't that bad, though there will be a slight increase in old crop ending stocks, which carries the new crop. Most of that will be offset by the drop, or all of that will be offset by the drop in acres, USDA reported. So we're saying new crop ending stocks will fall to 168 million bushels from last month's 190. Wheat, we will see an increase in ending stocks, new crop stocks. We were saying will go from 687 up to 753 million bushels. So that will be bearish wheat. That comes on top of the announcement from Egypt from yesterday, where they said that they will start accepting Russian wheat now, where previously they said they would try to stop it. And bottom line is, Russian wheat is certainly cheap enough to discourage any problems they have with quality concerns. So bottom line here for today, things were higher, of course, based on the China buys and also on this news of the weather change here. Keep in mind, as far as the charts, we talked about this corn market probably needing to fill that gap up to 620.5. That was done today. Also interesting was the fact that the market filled that gap and actually closed down under that point. 616, 617 will be the last trades here that we see at this time of doing this talk here. So bottom line, the numbers for corn, they are good for right now, but we're not quite sure if we've got a raging bull market in front of us yet, especially because we weren't able to close above that gap. Over on the livestock, just as exciting as corn, in fact, maybe a little more so. Cattle up $1.77 on the August contract. Bottom line is the traders are looking at some outside market issues. The fact that the ADP, which is a private market company, which reports on their estimates of monthly private employment. They come out usually on Wednesday or so before a Friday monthly employment report from the government. These numbers came out this morning from ADP. They estimated private market employment should increase 157,000 over last month. That's a great number, and in fact double the estimates of only a 60 to 70,000 increase. So bottom line is the trade is adjusting higher its estimates of employment here. So that's certainly helped the cattle. The idea that maybe it'll also filter into beef demand. So that's why we did have the rally today here. As far as cash, we're still waiting on something to go on here. Maybe numbers will move maybe tomorrow afternoon. Best bids we have at 109, lowest offers at 114. So there's still quite a disparity between packers and cattle feeders right now. So while the employment numbers for today were good, the trade will certainly be watching the employment numbers from the government tomorrow morning much more closely, and may use it as a gauge to trade cattle from that point. Keep in mind, as far as cattle, typically this is a time where demand dries up, and at the same time, we're expecting all those extra December placements to start being marketed later this month. So this is not a bullish time for cattle typically. Over on the hog side, up 267 on the August contract. Great deal there. Name of the game right now is trying to guess where this July 15th July contract will be expiring at. With today's move, July futures 96.27 is the current close. The lean hog index, so a measurement of cash hog prices, at 99.30. So there's about a $3 spread between cash hogs up here and where July futures are. And bottom line is we have about 6 or 7 days before next Friday's expiration of the July contract. So typically at this time, cash hogs are dropping hard going into mid-July. And right now, it looks like we've got a spread kind of back in line where it needs to be. But as we said before, typically cash hogs are dropping hard going into mid-July. So the seasonals would say maybe this July contract is a little overvalued. There's a lot of people saying that, wow, there's a discount there in the July futures. But right now, we're not going to get too excited about it here just yet. Also, some carryover support was there are some rumors right now of maybe China or Russia picking up some extra pork here. So that's certainly the talk right now. But overall, a lot of things going on here today, and certainly this week here with the commodity markets. A lot of movements in weather. We certainly encourage you to be in contact with your Allendale broker on all these changes in weather. Certainly for the mid-July and beyond time frame is what this market's focused on right now. If you have any questions about markets, trading, hedging, etc., feel free to give us a call here at Allendale, 1-800-262-7538, or get a hold of your research subscription to Allendale's products, and those are certainly can be subscribed to allendale-inc.com. This is Rich Nelson. Have a good trading day and a good trading week.